which is widely owned. We have some in the Hot Stocks portfolio, and this is Visa. It's a global payments technology company. It connects the consumers who have the credit cards or the applications in their phones that have the credit card details underneath them with the businesses, which are the merchants, with the banks and governments in more than 200 countries worldwide. It has just bought out its European subsidiary. It's a big company, $187.46 billion. Price earnings ratio fairly elevated, although to be fair, it incorporates some sort of moving parts because of the Visa Europe acquisition. Dividend yield not all that generous, 0.82. The share chart, though, let's put that up right now. 5-year chart will look tremendous. Oh, yeah, beautiful. Not quite at its all-time high, which is about $83. But this one's been a star performer, right?
Absolutely, yeah. So originally essentially a cooperative of the banks because it was a global standard for credit card clearance transactions. And so even the South African banks, when it IPO'd, got shares in. Yeah, that's right, yeah. So which were very valuable.
Although it does have the competitor MasterCard, so some banks issue the one or the other.
Yeah, or some of them both as well.
Yeah.
So it's really, I guess, in the sweet spot of payments technology because it's a facilitator almost of every credit card transaction.
So it's not a bank. It's not involved with lending anybody any money.
No.
All it does is it owns the networks that connect all of the merchants.
Absolutely.
And then the Visa card holders, the money then flows through and you get this acquiring thing going on.
That's right, yeah. So every transaction they essentially getting a cut off.
But they have had some pressure on those small fees, haven't they?
Yeah, because I think they have been quite high, obviously, throughout the value chain. The retailer, for example, has to pay quite a high merchant fee, which the bank is the acquiring bank, and then that shares it sometimes with another bank, and Visa as a facilitator of that takes a share. But so I think there's pressure, and also as technology gets simpler and their potential new entrants, so yeah, the
but a couple of good things have happened to them. So they got the go-ahead to operate in China more, because China was a sort of a funny state-owned closed market with China Union Pay or something, but now they're starting to roll out more points of presence. Europe as well. So Europe, the business still belonged to the banks. So in recent times, they actually acquired that. So now that gives them the ability to sort of do margin improvement transactions. But underlying it all is just simply one big thing, and that is that people are getting plastic, debit or credit, and using those more, and money banknotes less.
Yeah, and I guess that plastic is now going inside a mobile phone, so it becomes a virtual number essentially, and using that phone as your transacting mechanism. Uber, a lot of these payments and new businesses, they sort of underpinned by a sort of invisible credit card.
So that's an important point you're noting, is that sometimes people say, oh, well, I'm not using my credit card anymore, I'm now using the Uber app on my phone, so that's bad for Visa. Well, not so fast, because when you started up the Uber app, you had to put the card details in, so that's how they're getting their money paid. They don't care if you don't have the card. In fact, they're happy if you don't have the card.
Yeah, I think there's less cost in that transaction, absolutely. And so that, and I think fraud is a key element, because it becomes just a number that facilitates payment, and so that has to be protected. I think that's one of the threats to their business that they're constantly fighting against, because as your credit card leaks, is stolen, is cloned, so that someone makes a loss on that transaction.
Another point worth mentioning is they make a lot of money on foreign exchange switching. So like if you travel with your card outside of the borders of South Africa and you do purchases, you think, oh, this is fantastic, it all just happens. But it happens at a nice margin. They are constantly switching those transactions and making a turn probably on the currency.
Absolutely, yeah, and that can be quite significant, because it's not that transparent, that part of it. You know, what the exact rate is at the point you were transacting.
Yeah, I'm buying in dollars. How the hell must I know how many rands it is?
Yeah,
but they're coining it. Change of management recently, I noticed. Charlie Scharf, this was unusual, because Visa's headquartered in San Francisco. He's an ex-JP Morgan guy from New York, and then he said no, he didn't want to go out west anymore. But he's been succeeded by a guy who was on the board, whose name is Alfred Kelly, who's an ex-Amex chief. I don't think he was the CEO, but like one of the VPs or something. But that sounds okay.
Yes, yeah, Amex has been US-centric card processing company, actually very powerful, also had done very well, and I guess having that history and background is very well placed to run a global payments player.
Okay, so we have to call it quits here and decide hot or not. The only question, I guess, is not a great dividend yield, quite a high price-earnings ratio, lots of upside baked into the share price already at these levels. Too expensive for you, or hot or not?
I think if you look at the sort of potential explosion of the next level, we mentioned India briefly, they want to move almost to a sort of cashless transaction society. There's a lot of potential still in emerging markets. The China we mentioned. So notwithstanding the valuation, I'm still hot.
Hot on this one, yeah.